Welcome to this Markets.com company profile of Archer Daniels Midland. The company was founded in 1902 and is one of the largest agricultural processors in the world. With over 20,000 employees worldwide, Archer Daniels is headquartered in Decatur, Illinois. Running the company is Chairman and CEO Patricia A. Wartz. ADM is listed on the New York Stock Exchange, where it is traded on the S&P 500. Archer Daniels transports, processes, and merchandises agricultural products primarily in the U.S., but also operates worldwide. The company operates in three segments: oilseeds processing, corn processing, and agricultural services. Oilseed processing involves the soybeans, cottonseeds, sunflower seeds, canola, peanuts, and flax seeds into vegetable oils, while corn processing produces corn syrups, starch, and sweeteners, along with other food and animal feed ingredients. Finally, agricultural services buys, stores, cleans, and transports agricultural commodities. Archer Daniels Midland is a company that is well diversified into all parts of the agricultural value chain. Its vision for growth in the last few years has been to get more involved in the production of ethanol, as more and more people want to see the U.S. become less dependent on foreign oil. The business spurred growth in both revenues and earnings at ADM, as the margins were pushed up by subsidies the government provided, along with biofuel mandates. The revenue also increased as the price of ethanol climbed higher because of higher oil prices. Also helping the company out was the fact that many refiners are reducing other additives and replacing them with ethanol in gasoline blends. Now that many ethanol producers such as Veresen Energy are having trouble and are going out of business, ADM is in a better position to gain share. They are already the largest refiner of ethanol in the U.S. Another area where ADM may find growth is in producing bioplastics, which are growing in popularity and gives them a chance to encroach on products that were usually left up to the chemical and petrochemical companies. The other way ADM has been looking to expand is to increase its internal capacity in its oilseed and corn processing business. This, as the company believes that it can become more efficient and make higher gross margins with larger scale, and as the company strives to develop an unparalleled global network of crop procurement and transportation assets. At the moment, ADM is trading in the mid-20s with a PE ratio below 7. A few months ago, the stock reached an all-time high of 48, which means the company is now trading 50% lower since then. Some might say that this is a good opportunity to invest in the company, forgetting, however, that the stock dipped below 14 not too long ago. The company is surely in a better position than it was a few months ago. As a processor, ADM was suffering from the higher prices of commodities in the lower crush spread they were getting from its refined products. Now that higher prices have been passed down to consumers and the prices of the raw inputs are going down a lot faster than the refined products, the margins at ADM are set to go higher. Also, the future looks bright for this company because the reality is that as more people consume diets that are higher in protein, more feedstock is needed. According to the USDA, it takes 16 pounds of grains to produce 1 pound of beef. As emerging countries like China start to eat more meat products, more grain will have to be grown in the world, and ADM is in the perfect position to take advantage of that. One thing that is uncertain, however, is whether the new Obama administration will continue to provide subsidies for ethanol, which give that industry a big boost at the moment. On the downside, the low PE ratio is based on past earnings and not on earnings in this depressed situation. While people will still eat their same diet in the U.S., people who had recently moved up to protein-based diets in emerging markets may not be able to afford that anymore in this slowdown. Some people view this company as pure play on ethanol prices or ag commodity prices. It is in a similar situation to Valero in the oil sector. Thanks for watching. I'm Luisana Swigert with Markets.com.